Hello, good afternoon. Welcome to Your Stocks on CNBC-TV18, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Firstly, festive greetings. Happy Deepavali to everyone and all our viewers sitting at home. Thank you so much as always for showering us with all your love. Hope that continues to the next year as well. So thank you so much for that. But a quick look at what the market is doing, right? Because the Diwali cheer is coming in on the D Street as well. Look at the Nifty, 25,850 levels. About that mark is what the Nifty is trading at. 5/10 to 0.6% of gain is what the Nifty is managing to hold on to. 150 points up there for the Nifty 50. What's leading to the gains today as well is Nifty IT. That's supporting the up move. Nifty IT is up almost 1%. We have Nifty Bank that's also doing well. A whole host of banking companies had reported their numbers over the weekend. So we're seeing that move coming in from the Nifty Bank side as well. So keep an eye out of that one. Broader end of the market, let's pull up the Nifty Mid Cap. That's doing well. That's managing to hold on to gains of 1%, outperforming the benchmark indices, the Nifty 50. But the Nifty Small Cap, that's seeing gains, but not as much as the mid-cap space is seeing. So yes, that is what we're watching out for right now. 0.4% of gain for the Nifty small cap. Advance decline ratio, let's look at that as well. Clearly in the favor of advances, declines is almost even Stevens right now. Not much of an up move, either on the advance decline side or the decline side, advance side or the decline side. So that is something that we're watching out for. But yes, Diwali cheer, that is something that is continuing on the D Street. But this is a show where we solve all your stock-related queries. And we're going to be doing just that with our experts for today. We have Ashish Kyal, Chartered Market Technician and author at Wave Strategies Advisors, as well as Gaurang, Shah, Senior Vice President, Geojit Investments, joining us to answer all those queries. Gaurang, as well as Ashish, firstly, festive greetings. Happy Deepavali to you, your team, your family as well. And thank you so much, as always, for joining us on the show.
Thank you, Vinay, and wishing you and all the viewers and Gaurangji a very special Diwali, and may this new year be very prosperous and everyone does extremely well.
Absolutely, hoping for extremely well. The returns which we missed out last year, we want them coming now. I want them in the next year. So yes, hope this new Samvat actually brings us those, new returns, higher returns, better returns is what we watch out for. On that note, let me get started with those queries then for today. First query for today is coming from Shilpa Joshi from Pune. She's holding 76 shares of Eternal. Price is 201 rupees, making a profit. Long-term investor. Hold, sell, what should you be doing at current levels? Gaurang, good afternoon. Thank you so much for joining us. And what should the viewer do? Eternal is, I think, it's become a favorite of these investors. And the queries, we get a lot more. So what are we watching out for now?
It's a favorite on the app also, am I right?
Absolutely.
Well, first of all, season's greetings to all the viewers of CNBC TV18. To my good friend Ashish Kyal, to you, Vinny, and to your entire team.
Thank you.
God bless you all with pink of health and best of wealth. Small disclosure before I go on to Eternal. All recommendations this afternoon on the show are a part of our assisting recommendations. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest. But we give advice or recommendations to our clients on similar lines. They might have their investment interest. So on Eternal, which was earlier known as Zomato Vinny, we had covered it during the IPOs. IPO was at 76, if I'm not mistaken. And after post the IPO listing, the share price went down below IPO and then IPO price, and then it has climbed up because of earnings reported. We expect better earnings to come through. Of course, this time around, post earnings, we saw a little bit of profit booking because the stock had run up to its all-time high. And now it is consolidating at lower levels. Dark stores, the number of dark stores they are going to open will benefit Blinkit, which is the e-commerce. And of course, the food delivery continues to ring in the cash registers for Eternal. If you're a long-term investor, stay invested.
Okay, long-term investor, stay invested. And Eternal, Ashish, to you, what are the charts indicating for Eternal? Stay invested or maybe book out some bit of a profit right now?
No, I think it's better to be staying invested on Eternal. We can clearly see the stock has done exceptionally well. If you look at the weekly chart, the stock started running up from 200 levels, currently trading at around 338, and then I don't see any kind of reversal. There is short-term profit booking from the higher levels, so possible we can get a dip around 320 odd levels, 320, 318. But the overall outlook will still remain bullish. we can expect the stock to move towards the level of around 420. And very interestingly, Vinny, one more thing, I have observed that the Gen Z, I have a son, he was supposed to go down to get certain things, but he has started ordering everything online. So it seems these stocks, new age stocks are going to do very well, and especially Eternal, Swiggy, and those kind of sectors are going to outperform in the coming year. That's what I'm seeing.
Okay, surely the trend of ordering online has picked up, so continue to hold Eternal. That's the word coming in from both our experts. Next query for today, let's move on to that. Manish was writing to us from Mumbai. He's holding 1,374 shares of Carborundum Universal. The price is 1,138 rupees. So they're making a loss on this one right now. The other stock he's holding has also got 14,255 shares of Utkarsh Small Finance Bank at 29 rupees, making a loss on this one as well. Now he wants to know the outlook on both these stocks. Should he add more of these shares, is the word coming in. He's not looking to sell. He's asked whether he should average. Gaurang, what's your view?
Well, Vinny, so, first of all, my advice to this investor is that don't ever overexpose yourself to any particular sector or stock. Because if you do that, then you tend to bend towards more riskier kind of a scenario in case if your trade or investment doesn't go into your favor. No specific comments on Carborundum Universal because we don't have coverage right now. But make sure that your losses are tied down. Keep your risk appetite at an alarm bell, wherein if the share price have to go down, then those alarm bells should trigger and you should take appropriate steps. On Utkarsh Small Finance Bank, well, I think it was way back in 2023 when they had come out with an IPO. Post-IPO, of course, not much has happened. We had given a subscribe to the IPO from a long-term point of view. Unfortunately, the numbers have also not looked quite up as of now for Utkarsh Small Finance Bank. But we expect credit demand to go up, Vinny. And that should translate into positivities on the earnings front. So if you're a long-term investor, I'll keep the IPO note as the base of my recommendation. Continue to hold on.
Okay, continue to hold on. That's the word coming in there for Utkarsh Small Finance Bank. Ashish, your view, both Carborundum as well as Utkarsh Small Finance Bank, they're holding considerable amount in terms of both these stocks actually they have in terms of volumes. What should they do? Should they look to add more, average out, given that both the stock price right now is trading at a lower level than their buy price?
See, if you look at Carborundum, yes, we can clearly see that the stock has corrected sharply. The stock was made a high of 1,800, now trading at 900 levels, 900 odd levels. But it looks like forming a triangle pattern. There is a possibility we might see some kind of a bottoming pattern here, and we can see a positive reversal. So hold on to Carborundum as of now. On the downside, stop loss can be maintained at 835. That's a very important level. And on the upside, the stock can move back to 1205 levels on the upside. As far as the Utkarsh Small Finance Bank, I can see that the stock is trading somewhere around 18, 19 rupees on the downside, and the stock has not done anything much. It has continued to correct on the downside over the period of time, over the period of the past 1 year. And that's not a very promising sign. If that's the stock the user is talking about, viewer is talking about, it's better to be out from Utkarsh Small Finance Bank, and we can then look forward to add into a banking space, something like an SBI or something like a Kotak Bank that looks much more promising.
Okay. That's a word coming in there from Ashish on the technical front for, instead of Utkarsh Finance, he's mentioned some other names as well. Let's move on to the next query then, gentlemen. This is coming from Rahim, who's writing to us from Telangana. He's holding 75,000 shares of Ease My Trip at 10 rupees per share. Right now, it's trading at 8. Now, he wants to know, should he continue to hold or sell the stock? Your word on this one, Gaurang.
Vinny, I hope this is not a punting bet which has gone wrong, because the quantity that this gentleman has bought is 75,000, though the stock price was about 10 rupees. Currently, it is at about 8 rupees. If you look at it in terms of percentage, it's a huge loss in terms of percentage if you equate from the purchase price to the current price. My humble request to all the viewers of CNBC-TV18 is that don't look at the price of the stock and buy the stock in quantity. If you do that, it doesn't translate into a fundamental long-term strategy. I hope that this gentleman had done some homework. We don't cover such stocks, to be very honest with you, Vinny. I would also, advise viewers of CNBC that avoid investing into single-digit stocks. There is a reason why the stock is trading at single-digit, and that's extremely weak fundamentals.
Okay, yes, absolutely true. Be careful when you're investing. Judge in terms of the fundamental front as well, the management side of the commentary, what comes in, what the management is doing. Important to know the issues around that as well. And even the sector is going to be important. But Ashish, your view on the technical front, what should the viewer do?
I completely concur what Gaurang ji said. The overall trend for the stock has been down. It moved down from around 32 rupees and 29 rupees and now trading at 8 rupees. There is absolutely no reversal. The stock is not even breaking its 20 DMA since many, many weeks. So the overall trend is down. It's better to be out from something like this and invest in, if you want to invest in something like an Indigo that has a much better chances of going up than staying with Ease My Trip.
Okay. Thanks for the view there, Ashish. But on that note, we're going to actually slip into a very short break, viewers. But here is a note for you all. For our viewers, you must have noticed that there is a money control stock score above the line graph, and this is a score assigned to each stock based on money control's multi-factor algorithms. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts and technical indicators for each stock. Each of the individual parameters considered for calculation of 4 factors are assigned a score, which is aggregated to arrive at an overall Q factor score, G factor score, V factor score and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions. Welcome back to Your Stocks on CNBC TV18. This is the show where we solve all your stock-related queries, and we still have with us Ashish Kyal as well as Gaurang Shah to do just that for us. Let's move on to the next query, gentlemen. This is coming from Deepak Dave, who's writing to us from Gujarat. And this is an investment query. He wants to know if it is the right time to invest 2 lakh rupees in TCS for the long term. Gaurang, your view for TCS, what should they be doing? Would you look at TCS in the IT pack right now, or maybe the mid-cap IT companies or any other company?
Well, by asking this question, you put me in a fix, to be very honest. We have coverage across IT that is starting from the base of the pyramid, the small cap, mid cap, as well as large cap. We do have positive coverage on buy side on TCS, and our confidence has just got reinforced Vinny, post the announcement of Q2 numbers, because a lot of people had wrote an obituary for IT sector and of course stocks related to IT sector in terms of dismal performance. But fast forward to the recent past and of course whatever numbers we are likely to see, I think situation is going to improve as we go into the future. My only request to this viewer is that if you want to put 2 lakh rupees, please have 1.5 year plus kind of time horizon, because it will take time for situations to evolve for positivities, and then you will see those positivities translating into better numbers and better share price.
Okay, that's how you're coming in there for TCS. 2 years is the time period. At least you should look to hold on to that long-term story. Then you'll start seeing it playing out. That's a word from Gaurang. Ashish, your view on the technicals. TCS as a long-term story. Would it be a good bet right now?
Yes, indeed. We can clearly see there is some kind of positive divergence already emerging from the TCS. Even the Nifty IT sector has started showing some kind of a consolidation, and I think it's going to be an upside breakout soon. TCS also has a very positive time cycle starting at 28th October. So I'm expecting by the end of this month, there is to be a positive traction from the stock. On the upside, we can expect the stock to move towards the level of 3420, which is a gain level. And on the downside, the support for the stock comes to around 2870. So my suggestion would be accumulate is the way, slowly and steadily in staggered fashion. And eventually we should start seeing positive signs on the IT sector.
Okay, slowly and steadily start accumulating TCS. That's a word coming in from Ashish. So keep an eye out on that and the IT sector as well. Let's move on to the next query then. Ritesh Shah is writing to us from Mumbai. He's holding 200 shares of Dalmia Bharat Sugar at a price of 505 rupees, making a loss on this one. He's a long-term investor, so he doesn't mind holding. But what should he do now? What should the view be for this one that he's watching out for? Gaurang?
So I think entire sugar sector was a bust for all the good reasons with respect to ethanol, because ethanol had become the big earnings driver for sugar manufacturing company because it's the byproduct. Now, unfortunately, the percentage of blending that was supposed to happen by the oil marketing companies, it's not even halfway to that mark. Yes, there is a positivity in terms of price of ethanol going up over the last 2 years, but that does not transform into great visibility. Unfortunately, we don't have coverage on Dalmia Bharat sugar, so I won't give any specific comments. But one request again, we bought it at 505 and the stock is trading at about 356. Don't let your capital erode so much that recovery becomes difficult.
Okay. And what's your view on this one, Ashish?
See, if you look at Dalmia Bharat, we can clearly see that the stock has broken below the 20 DMA. So the overall trend looks to be reversing on the downside. One has to be a little cautious because the stock moves in a very cyclical fashion. If you look at over the past 3-4 years of chart, it has been failing to cross about that 24,000-25,000 mark, reverses there, and again goes back towards 1600. So my suggestion would be to be out from here. We can clearly see it is breaking the support and avoid this sector because the stock moves in a cyclical fashion.
Okay. That's a word there for Dalmia Bharat sugar. Avoid because it's a cyclical sector. So keep an eye out on that. It's important to know that. Next query for today is coming from Meghna Raj, who's writing to us from Hyderabad. She's holding 35 shares of Just Dial. Price is 1,010 rupees per share. Wants to know if she should continue to hold it or sell this one. Gaurang?
Again, same story, capital getting eroded, Vinny. We used to cover Just Dial quite some time back, but because of the news flow and the kind of performance, we have removed the coverage. Currently, we don't have any coverage. Well, if you really want to, if the viewer is open to an alternative investment idea, I don't know whether the investor is open to this or not, but I think making a move to a banking and finance, something like, say, State Bank of India, the public sector bank has been buzzing for quite some time, and there is improvement on the earnings front. One request again, don't let your capital erode because then recovery becomes difficult. If you are open to making an alternative investment idea, then I would prefer State Bank of India. No specifics on Just Dial.
Okay, no specifics on Just Dial. Can look to switch. That's a better bet is what Gaurang is highlighting. Ashish, your view for Just Dial. What should the viewer do? Is averaging a bet right now, or maybe the downtrend that we're seeing in the stock is something that is going to be continuing?
See, Just Dial has a support at around 750. My suggestion would be do not average it now. We need to see it crossing well above that 900 mark in order to start seeing positive traction. So hold on with 750 as a very strict stop loss because if the stock breaks that, there is much more downside that we can start seeing on the stock. And on the upside, let it cross about that 900 mark and then only we can expect a positive momentum.
Okay. I'll keep an eye out on the stop loss there for Just Dial. Let's move on then to the next query, and that is coming from Rajashekhar, who's writing to us from Telangana. He's holding 25 shares of Jyoti CNC Automation. Price is 1,534, and they are making a loss on this one. Future prospects of the stock, Jyoti CNC. Gaurang?
I believe this belongs to an automation. Jyoti CNC Automation is the name. Again, no specific comments because we don't have coverage. But if you're looking at auto ancillary related stocks, and one thing is there, Vinny, if auto sector is going to do well, I think auto ancillary tire and battery manufacturers will do well because they all three are connected to each other. So we have positive coverage on companies like CIE Automotive or Uno Minda.
Okay. Okay, that's a word there for Jyoti CNC. Other names also mentioned by Gaurang, so keep an eye on that. Next query, actually, your view on this, Ashish, Jyoti CNC.
We can clearly see the stock after touching 1300 corrected sharply on the downside, made a low of 840, now consolidating. So possibility it will consolidate in a range. On the upside, I think the stock has stock can move back towards that 1050 where the user can look forward to exit. On the downside, the support for the stock can be 840. Maintain that as a stop loss.
Okay. Let's move on to the next query. This is from Balakrishnan, who's writing to us from Chennai. He's holding 25 shares of Thermax. Price is 4,700 rupees. Long-term investor. Gaurang, should he continue to hold this for the next 1 year?
Well, difficult because, when our target price was in place and we have given a sell recommendation of Thermax. If you're looking at cap goods engineering or water treatment, effluent treatment, or desalination kind of companies, then our view is that there are better companies to look at. One company that we have coverage over here is Viatech Wabag or Vatek Wabag, whichever you want to pronounce it. This would be a better option since we have a sell recommendation on Thermax. Make a switch.
Make a switch. That's the word there. And Ashish, a quick word from you. What should they be doing? Thermax?
See, Thermax has taken multiple supports at around 3,000 levels. It has tried to protect that. That's a very important price action zone. So 3,000 maintain as a strict stop loss. If it goes below it, definitely make a switch from here. And on the upside, the stock can possibly move towards 3,800, which is the previous the zone high. So 3,800 can be the target over near term, and 3,000 can be the stop loss.
Okay, keep an eye out on that strict stop loss over there that Ashish has mentioned. But Gaurang as well as Ashish, thank you so much for joining us on the show. Hope you all have a great Diwali as well. And thank you so much, as always, for joining us, helping our viewers understand and solve their stock-related queries. Viewers, remember, you can always send us and email us your queries as well on the email address that will be on the screens for you all. But thank you so much for tuning in. Have a great next couple of days. Enjoy your holidays. Last hour of trade is still left, so don't go anywhere because closing bell is up next to take you through all of that.